for having me on your show, Norm. So my name's Jeff Sipes. My wife, Natalie, and I own Blue Water Credit. We're a legal and ethical credit repair company. We were founded in 2008 near the Great Recession and been helping people repair their credit for about 11 years now. Past 11 years, we've nearly reached 9,000 clients, so we've had a lot of experience, and just wanted to let everyone know that, our core value, we exist to love and value people by offering solutions, giving hope and guidance to those struggling with bad credit.
Perfect. And I know you guys actually live by those words and that credo. It's not just an empty slogan. You're a family-owned business. You're local, but you can help people all over the U.S. But you guys do an incredible job. So 2008, that was some pretty crazy times. And, of course, we probably met around that time and started, I probably threw one or two clients to you. I don't remember exactly, but why don't you tell a little bit about why you started, why you saw the need in 2008?
Yeah. So I was our first client. When I was 21, I was going to USC playing football.
Did you
I don't know
really?
if you knew that, Norm.
All right, yeah. Let's time out on this now. You think you know someone, and they're a Heisman winner or something, huh?
Yeah. So it's actually University of Sierra College. They're in Rockland, the junior college. Sorry, I had to throw that in there. And that's a little cliffhanger for you. Me and my best friend, we were going to college, and we decided, hey, we want to get rich quick, so we're going to drop out of college and try to start a business. And it actually ended up failing. After 6 months of trying to get the business going, had a ton of debt and no income. So I was at a fork in the road. I either need to file bankruptcy and try to dig myself out of debt, or I had to try to go to work and pay my creditors back. And unfortunately, I borrowed money from friends and family. So for me, bankruptcy wasn't a good route. So I went to work at the gym business, worked like 60 hours a week, and lived on my brother's couch and some friends' couches. In about 18 months, I was out of debt, other than my car.
Wow.
And so, I went into a local credit union to apply for a bank account at the time, and they actually ran my credit. And I remember the guy coming back, and this is back when they had it like on paper, and he's like, "Mr. Sipes, your credit is so bad, I can't give you a debit card." And I was like, "Oh my gosh, my credit's so bad, I can't even get my own money."
Yeah, that's how you know it's bad, huh?
Yeah. So a couple years after that experience, a friend of mine said he was working on his credit, repairing it, and he had hired an attorney. And I was like, "What? You can repair credit?" I didn't know. So I goofed around for about 18 months working on repairing my credit. And then at 25 years old, still working in the fitness industry, I bought my first house. And that was when our local economy was really booming and the housing was going up like crazy. And so I ended up flipping the house about 6 months later. And then I started buying and selling homes on the side. And while I was working at the gym, telling a lot of the members and friends, "You guys got to go buy a house right now because the market's, it's never going to go down."
What year was this?
And so, 2004, 2005.
Yeah.
So we were feeding the frenzy. And surprisingly, some of my friends came back and they said they tried to buy a house, but they got turned down because of their credit. And I was like, "No way. I know exactly what that's like." So I started working with them on the side. In 2008, we saw a downturn in the economy, and we're like, "You know what? This would be a great time to get in and open a legal and ethical credit repair business." So my wife and I quit our jobs, and we started Blue Water Credit in 2008. And the rest is, hasn't been a smooth transition at all. We always run into bumps and bruises through starting a business, but it's been a good 10 years overall.
And you're helping a lot of people, like you said, 9,000 and counting rapidly. That's a lot of folks that you're not just taking their money, but actually providing solutions and helping them move on from financial problems. So that's pretty cool. I didn't even know that whole full backstory.
Oh, I'd like to share it because people, it's just like anything. People are like, "Oh, yeah, you don't know where I've been or what I'm going through," and I'm like, "Well, I may not know your exact story, but my story wasn't easy. I was living on the couch. Literally, I lost like about 15 pounds because I couldn't afford to eat that much.
Yeah.
So you go through a struggle like that. There's a lot of lessons in there, and so I got to learn the debt the debt cycle. Borrow too much money, you get in trouble. You got to dig yourself out at an early age.
Yeah, and it's interesting that you've gone through those experiences because it gives you a spectrum of perspective, let's say. So when someone comes to you, some people you could probably say, well, you're just spending too much, and you need to, return the brand new car and stop going to the mall. But some people,
Right.
you probably say, no, you guys are working two jobs and doing the best you can, and it's just, you're drowning. So you probably see it all and have a little bit of sympathy for everyone, huh?
Yep, that's it. Yeah, and you never know someone's story. So we do our best to, kind of get the backstory. Was it medical, or was the loss of job, or what was the reason? It went through a financial hardship, and then we want to give someone a plan. So credit repair isn't for everyone. A lot of people think credit repair can make your debt go away. So dealing with the debt really is the first objective with repairing your credit. And then once you get into a spot where you can manage your finances, then we can start working on rebuilding the credit. But we want to make sure we deal with the debt first. And you obviously have a huge background on dealing with the debt and working on getting out of debt. So
yeah, it's something that still fascinates me. But and what's interesting now is I'm completely debt free. What Jeff is alluding to, I lived in Sacramento, of course, and I was, of all the people saying, buy a house, buy 10 houses, the market will never go down. I was probably the one shouting it loudest, and had 5 or 6 houses that were all 100% financing and weren't even excuse me, weren't even cash flowing as rentals. But I struck out on a lot of them. I hit it big with 1 or 2 that I flipped. But I had probably near $1 million worth of debt when I left Sacramento or thereabouts.
Wow.
And now it's the exact opposite, where I'm completely debt free, zero debt. I make $1, and 90 cents of it goes in my savings. I'm like an old school. I'm probably burying money in the backyard as my next step in tin cans. But that's not for everyone. But definitely different people have different challenges these days that past generations in America haven't had with debt or with credit.
Yeah.
So why don't you talk about a couple of things, like, you mentioned student loans, medical debt, a couple of the things that are affecting people, especially today.
Yeah. Yeah. So the number one reason statistically people file bankruptcy is due to medical debt. So, we see a lot of medical collections on credit reports. So, I'm not a big fan of paying insurance, but it's kind of for that, it's hope for the best, plan for the worst scenario where, you got to make sure, like, your car, you have enough uninsured motorists. My mom works for a law firm here in Sacramento, and she's been preaching to me since I've been driving. If you have anything on your insurance policy, make sure you have a good uninsured motorist, because somebody that doesn't have insurance hits you. You got to make sure you're covered there. So same thing with your medical insurance. It's medical insurance is definitely rising. It's not a fun thing to pay every month, but it's for that. It's for that unexpected trip in an ambulance or in a hospital where, a couple of days in the hospital could get you $100,000 bill, where insurance is something that you have to have in those situations.
Yeah, definitely. So you're saying the number one cause of bankruptcy these days is medical bills. And so with credit repair, so let's walk through, let's look at it like this, that someone walks in your office, you pull their credit or they have it pulled already. What are you seeing on average? What are you seeing as some of the challenges or the amount of debt or collections, or what does the average person have that's hurting them on their credit?
Yeah. So just for the listeners, so they can understand our process, is we always offer a risk-free consultation. We can do the appointment face-to-face or over the phone. Mm-hmm. It's about a 15 to 20-minute consultation. We review the credit report. We're going to review the components of a credit score, and then we're going to give specific advice on their situation. So we recommend that everyone have at least 1 or 2 credit cards. If any listeners out there don't have a credit card, we have a secure credit card we could refer. I could get you the link, Norm, for that. Mm-hmm. And then the second step is trying to keep low balances on existing credit cards. So your credit score will actually go down if you charge more than 10% of your credit card limit.
Mm-hmm.
So making sure if you have a smaller secured credit card like $300, if you charge $200 on it, if you're paying it off every month, you're going to be tanking your credit score.
Wow.
So making sure you're not charging more than $30 on that $300 credit card will make sure your score is high as possible.
So those, I know it's the factors that go into anyone's credit, but that's the utilization,
yep.
Right?
Yeah, exactly. The utilization of the credit card. So, yeah, that's the easiest fix for anybody that's looking to get a few points out there is to keep your credit card balances below 10%, but not zero isn't as good as a small balance. So if they can keep a small balance on the card and then just pay it off when they get the statement, that's going to help them the most. And then in terms of negative items, so that's what we specialize in removing. Collections are one of the easier items for us to get removed, whether they're paid or unpaid. We do have a debt negotiator on staff that can negotiate collections for deletion, especially if it's like a medical collection. And we see this a lot in if it's tied to a phone or TV, those are the most common collections. So Sprint, Verizon, AT&T, Comcast, Dish Network. So if it's tied to a phone or TV, those are probably the most common collections.
Okay.
Have to do with terminating service early or not returning equipment. That's probably going to be the number one things that we see. Other than that, it's probably student loan late payments would be second place to that.
Yeah.
People thinking that their student loans were in deferment, and then they come out of deferment and they're not notified. So make sure that you keep your information up to date. Your phone number, your email address is up to date, and mailing address too, because they if you move around and the student loan or your creditors send you information and you never receive it, and the payments are late, they're still going to mark it late, and they have the right to, even though if you were not notified.
Wow. Okay. Good advice. Yeah. Huh. And so,
what
about?
Lastly, I would say tax liens and judgments. Those are not showing on credit reports anymore, so that definitely gave everyone a little boost. Happened April of 2018, so it's been about a year and a half now where tax liens and judgments aren't showing anymore. So that's been a benefit. And then overall debt, just making sure we can get into a situation where our debt's manageable. We don't want it to get away.
How about there's a lot of misconceptions around credit as well, and unfortunately everyone thinks they're an amateur expert, right? And they start listening to their neighbor or their mechanic or the fry cook at McDonald's, right? And they think So some of these misconceptions you could cover maybe people saying, okay, well, I have this credit card or an account, and I paid it off when I closed it down, so my credit should be going up.
Yeah. So FICO, which is the credit score banks use for lending, whether it's a house, a car, credit card, they like to see 6 accounts open, paid as agreed. So closing an account will actually lower the score. If you close a credit card and you have other credit cards with balances, it'll also hurt your debt ratio, which you mentioned earlier, Norm. And then one thing that we've been seeing a lot of is Credit Karma. It seems like nearly every single person that we talk to now has a Credit Karma account. And Credit Karma gives you advice for a different credit score than the banks use. So all that information that Credit Karma is giving us is not applicable to the same credit score when we go apply for a home loan.
Which one does Credit Karma dispense advice about?
They use the Vantage credit score.
Okay.
And banks use, for car loans, home loans, they use FICO. And so, so everyone thinks that they have they're getting accurate information from Credit Karma, but I've seen Credit Karma's score be off 10 points. I've seen it be off 90 points. So it's just not accurate at all.
Wow. And it's actually, and if you're going off that and then you want to buy a house and you think you're ready and you walk into a mortgage broker or a bank, and then you're shocked when your score is 100 points lower in real life.
Way different.
Yeah.
And it typically, the Credit Karma typically is higher than your FICO score. The mortgage FICO score tends to be the lowest of all the credit scores because it's the biggest loan, so it tends to be the more conservative score. So
Credit Karma Credit Karma is like the Zillow of credit scores, huh?
It is the Zillow's estimate of credit scores. Exactly. Yeah, if the listeners want to go get an accurate credit score other than having a mortgage person pull it, they can go to myfico.com, myfico.com, and they have to pay. It's either $30 to sign up for their credit monitoring or $60 one time, and they'll have access to all their FICO scores, and it will not impact their credit.
And that's another misconception or myth or confusion in the marketplace that people have is, oh, I don't want to get my credit pulled. I don't want to check my credit because it's going to hurt my score. Then on the flip side, there's some people that are going to every quote unquote free site on the internet there is and, giving their information and having it pulled left and right. So can you talk about those two on either extreme and what's the correct way to go?
Yeah, you bet. So if you check your credit score on a website on the internet, it doesn't impact the score. The challenge, like I said earlier, though, is there's tons of places to get your credit score. But if you're going to a website other than myfico.com, it's not going to be an accurate score.
Yeah.
And then if you are applying for a loan, each time you apply for the loan, it will impact the score 0 to 5 points.
Okay.
And the reason it could be 0 is FICO gives you 2 weeks to 2 to 4 weeks to rate shop. So you can go have 4 or 5 lenders run your credit the same day, and only the first inquiry is going to affect the score. The other inquiries don't have any impact.
Gotcha. That's great information. Great information.
Yeah. It's better information than getting it from your uncle Bud that's got too many buds in his refrigerator.
Exactly, right. He's the same person that was giving everyone real estate advice during the before the last crash, right?
Yep, that's it, right, for sure.
Let me talk. You talked about the process when people come into your office or call you and you have a free consultation. In terms of if someone does want help with credit repair and enlists your services, what does that process usually look like?
Yeah, so our program is on a month-to-month basis. In our industry, credit repair companies cannot charge fees in advance. So we always review the credit report. We'll find out how much work it entails, and then we'll give someone an estimate on how long we think it would take and what the monthly fee would be. Typically, our fees range from $100 to $200 a month, and our program is anywhere from 1 to 6 months.
Oh, that's nothing. That's a drop in the bucket. Yeah.
Yeah, so I always do I try to look at it as the risk and reward. So, if you invest, $500 or $1,000 in your credit, but it can save you $2,000 or $3,000 a year in interest, it totally makes sense.
Yeah, and let's talk about results, right? Let's get down to brass tacks. Because I know you're a big believer in not just, promising everything and not delivering, but quite the opposite. You guys are all about the results, and a lot of your clients come from referrals, word of mouth, loan officers, realtors who keep referring you clients because you do a great job. So, of course, everyone is different. Every situation is different. But what is a range of typical results that you're seeing?
Yeah. On average, our clients see a 15-point increase in their score each month we work with them. And that translates into about 42% deletion rate.
Wow.
So if somebody has 8 collections and 2 accounts with late payments, that's a total of 10 accounts. We can remove 4 of those within 1 to 6 months, and then the client would obviously, their score is going to go up, and then when they apply for their home loan, their car loan, their credit cards, instead of getting the higher interest rate, they're going to be qualified for a much, much lower interest rate and save money each month.
Awesome. Yeah, so that means if around the average is around 15 points each month, if I'm sign up, I'm with you guys for 100 months, my score will be 1,500 or something? Is that right?
Yeah, that's funny. Our program is 1 to 6 months, so 6 months is the longest we take on a client.
I hear you.
So it's anywhere, usually 15 to 90 points is the range.
That's awesome. That's a huge chunk though that really helps people out. What is what is one of your favorite, looking back on all your clients? I'm sure you have 9,000 of them memorized, but what's one of your favorite stories of someone who came in with just abysmal credit and then you really, really did a great job? Do you have any of those you want to recount?
This happens nearly every year, and this is by far, it just sticks in everyone in our office and in our memory, is around Christmas time. We'll get a photo of a family in front of a house, and they'll say, this is our first year in our home. We're celebrating Christmas here, and we couldn't have done it before we hired you guys. Because before we hired you, we weren't able to get a loan, and because of your services, we're now spending Christmas in our very first home. So those stories are what makes it all worthwhile.
Oh, that's awesome. Yeah, I'm sure you put those right up on the fridge immediately or on the mantelpiece or whatever, huh?
Yep, we collect them here at the office. They go up in the front.
That's super cool, yeah. And talk about that a little bit with home ownership. I know there's so many different factors with real estate markets, mortgage rates, all that fun stuff. But what basically is a good goal for someone to shoot for if they want to own their first home?
Sure. Yeah, credit score wise, a lot of lenders can get a loan approval with a 580 credit score. When you have a 580 credit score, you're going to be getting the worst rates. Usually it's 1% or even more than 1% off of what the advertised rate is. Plus, you're going to have to pay heavier closing costs. So usually what I recommend targeting people that have lower scores is try to get it up to a minimum of a 640.
Okay.
Once you get to a 640 credit score, you're eligible for FHA, which is going to be lower down payment. You can also potentially qualify for down payment assistance with a 640. And then your FICO score, the banks give you what's called risk-based pricing. And so what they have this sheet behind the scenes that they never show anyone, but every 20 points gives you better interest rates up until you're around a 740 or 760. So, but the biggest benchmarks are usually 640, and then the next big benchmark is 680, and then 720. Those are usually the three big benchmarks where you're going to get close to the biggest price improvements on your loan.
Oh, so, that's great. Great information. So if you're considering you're renting and you want to buy a home or home ownerships in the future, you definitely want to shoot for 640 at least, I would say, right? Or you're saying, but also with FHA loans, it's a wonderful way to get in, but it is pretty expensive because you have mortgage insurance, correct?
Correct. Yep. The mortgage insurance. Yeah. Those that's the one downside to an FHA program.
So people, it would even behoove people to really try to get their score up to like a 680 or something where they could use conventional financing and not have to maybe mess with all that.
Yeah, exactly. And I've heard some lenders talk about conventional financing with as little as 5% down, and you don't have the mortgage insurance.
Yeah, so that actually
like you would with FHA. So
yeah, but that's good to know. When we look at an average consumer, right? We look at one of the mistakes we make is we look at the price tag. So I'm buying a house for $300,000. This car costs $50,000. This student loan, blah blah blah. But of course, with the interest we're paying, it's exorbitant what we really pay out of pocket over a long time. 30 years for a house, or 7 years, 8 years, whatever it is for a car. And so, you want to talk about that a little bit because it does relate a lot to credit and how much you could save people with a good credit score. So, what we actually pay, including interest versus the price tag.
Yeah, for sure. So from a mortgage standpoint, a 40-point increase in a credit score could literally net a savings of $40,000 over a 30-year period.
Wow.
It's crazy to think about. Yeah, and we're in the Sacramento area, so we have a lot of clients locally. Our average house is about $400,000, and so with like a 620 credit score or below, you're looking at like 5.5%, 6% interest rate. And if you can get up to like a 740, you're looking at around 3.5%, 4%. And so your savings on that difference there is like $500 a month. So you look at $6,000 a year for 30 years. That's a lot of money.
Wow,
and I talk to people all the time in the Bay Area, like San Jose. Your average house is like $1 million. I mean, that's you can't afford to buy a house down there if you have bad credit, even if you make a lot of money.
Yeah, and so of course, if it's a $100,000 house, the savings of having great credit isn't going to be as profound. But when you start looking at 400, 700, $1 million, man, you save a ton of money by having a good credit score.
Yeah.
And Really, I was,
Yeah.
to be honest with you, and I'm not just saying this, I was sort of shocked at how little you charge. I think you need to raise your rates because you're saving people. I mean, why wouldn't you invest 100, 200 a month if that's the kind of money
Yeah.
you're going to save with a home purchase or auto loans, credit cards on top of it? Talk a little about credit card rates and what you're seeing of the subprime ones versus prime credit.
Oh yeah. We've seen rates in the 20%. Some people have paid, especially when you're dealing with like a payday loan or something like that. They could be
Yeah.
upwards near 28, 29%. But yeah, the rates on credit cards, you have such a huge swing. 5, 6, 7, or you get the 0% introductory offers on like a 12-month interest, no interest for 12 months, versus someone with bad credit, you're going to be paying close to 20% interest. And if you do the rule of 72, you're probably familiar with that, Norm, is you take 72 divided by the interest rate,
Mm-hmm.
and that's how long it takes your money to double.
Mm.
So at a 20% interest rate, that means your interest, your balance on your credit card would double every 3.5 years.
Wow.
If you're making minimum payments. Minimum payments are crazy to think about. On a 10% credit card, which is a decent credit card, on a $5,000 loan or $5,000 balance, making minimum payments, it'd take you 18 years to pay it off.
It's almost like renting a balance, right? It's like
Yeah,
it's like
you are renting a balance
you're
or
renting money you already
leasing a
spent.
balance.
Yeah, that's insane. Yeah, and a lot of people, I mean, are just they have tons of credit cards. They're just juggling the stuff. But you also look at the big picture. People who, how are people going to retire? Our population's getting older. What is the stat? Something like, is it 60% of people couldn't come up with $400 today without putting it on a card?
Yeah.
And yet alone saving, hundreds of thousands for retirement. So you wonder where your money is going, and it's going, a lot of it, to interest. And that's why having a great score could really save them, huh?
Yeah. Or you look at, not to deviate off this, but we were in a meeting earlier and we were talking about comparison is the killer of all joy. And so with the amount of social media that we're all consuming every day, we're literally looking at everyone's post, which is, I said it earlier, they're posting their best and hiding the rest.
Yeah.
And so we're like, well, wow, they're going on vacation, or they just got this new thing, or I should need to buy that. So then all of a sudden it's creating this frenzy, right? Looking at like, man, I need a new iPhone 11 Pro, and I walked in the store and I was all, it's $1,100 phone. And Apple wants us to get a new phone every year.
That's
this is
nuts.
it's amazing the amount of money we're expected to spend now every year just on, the quote unquote normal.
If you saw my beat up, old, cracked, half working iPhone 5, you would laugh here, Oh man.
I admire you for that, Norm. It really, it takes self-control and willpower, but that's the mentality that we all need to have if we want to have lower stress. Stress and anxiety are across the board in every generation is the highest it's ever been, and I attribute a lot of it to finances. We're overworked and little. We need to relax a little bit, take it down a notch.
You're right, and that's a great point. I'm glad you brought that up, actually, because number one, two things there. Americans now work more hours than anyone in the world, right? I think you guys had a blog on this a while ago. In fact, I know you did. But something ridiculous, like not even close, even blowing away like countries that are traditional grinders when it comes to work, like Japan and these other companies. Yeah, but we are by far working more hours than, and then a lot of folks don't just have their job; they have their side job too, right?
Yeah.
And then, but so with that should be like, okay, well, at least we have some money where, but the amount of stress and anxiety over finances is at an all-time high, like you said, huh?
Yeah. So I'm almost a believer, like Warren Buffett said. He said to be fearful when people are greedy, and greedy to be greedy when people are fearful. From a market standpoint. And so from a debt standpoint, we could almost do the opposite too. It's like, hey, if majority of people are getting into debt, which is causing stress and anxiety, we should be trying to swim the exact opposite direction. It's like and live the quote norm lifestyle.
Oh man, don't do
try to
that.
work
We
on
don't.
being debt free.
Yeah.
And put our currency into the relational bank account instead of the Apple iPod and the earbuds and all the other stuff I need to spend money on.
Yeah, it's interesting. Like you mentioned that every time, I come back to the States, I live overseas and I come back to the States once a year to visit mom and fatten up on home cooking and buy things my size and stuff. But every year I come back, it's like a little time warp because I notice things that people don't because it's just normal.
Yeah.
And a lot of what I notice is like you said, just the prices of little things here and there. It used to be spending $29 and now it's like $79 just on a small little thing. So it's getting more and more expensive just to live in the US and people are working more and their stress is crazy. So that's why doing things correctly, with credit score, you'll start saving money and you'll see a ripple effect in your finances. It's pretty important.
Yeah, that's important. And I love the message that you preach, man. It's good. It's, take care of your health, take care of your finances, your relationships, all the things that matter the most.
I appreciate that, but honestly, I'm just stumbling forward like everyone else, man. It may seem like I'm some advocate for minimalism, but I have way too much shit in my little apartment, and I spend on stupid stuff. But I do try to learn, and you try to figure out the mindset of wealth versus the mindset of the vicious cycle of poverty, which is pretty important. If you have anything to illuminate on that mindset.
Yeah. When I was in my 20s, early 20s, this was about 20 years ago, I read a Rich Dad, Poor Dad book. And it was, there's good lessons in it. It's a pretty easy read. But it talks about he had a rich dad and a poor dad. And his rich dad, he wanted to buy assets that produced income, where the poor dad wanted to buy the fancy car, wanted to have the big house payment, and all these things that limited the amount of money you can invest in retirement and things that actually generated income. And they came out with a game called the Rat Race. And basically this game, it was called the Rat Race because we're all in this rat race where we're basically just chasing our tail trying to make ends meet. And in order to get out of the rat race, you had to try to create and buy things that produced income, like a rental property or stock with dividends or something like that, so that we're investing in those kind of things. And then the earlier you start, obviously the better that works out for you because of the whole time factor, time and interest.
Yeah. That I've read that book too as well. I was actually a humble house painter at the time, and I was like, whoa, this is next level. This sort of makes sense, why I'm painting other people's investment properties. It was a good lesson. And there's the beautiful thing these days is there's absolutely no shortage of information, right?
That's great.
You could do YouTube University and Udemy and all. I mean, books and everything. It's if you really say, okay, I want to learn about debt and finances and budgeting and credit and buying a home and everything, you could just set yourself half an hour a day and start listening to podcasts and watching videos, and don't click for all the coaches who are saying selling you stuff maybe, but the average person could really get an unbelievable amount of information.
Yeah. I read that if you read 15 minutes a day over the course of 18 months, that's an equivalent amount of information as a 4-year degree.
Wow.
Yeah, so that's just what it is. It's over time. So if you're learning and growing every day, imagine the person, like if we run into our future self in 5 years, I don't want to be the same. You don't want to be the same. We want to be better versions of ourselves. So making sure we're going in the right direction.
Yeah. Are you a big podcast guy? I know you're into books and education, but yeah. What are some of the podcasts you listen to?
John Maxwell's been one I've been into recently. It's really about leadership and attitude, how majority of what we want in life, we just need to be resilient. We need to be focusing on the good. It's a perspective, how we look at something. So two people could have the exact same situation happen, and one person could say, "Oh, that's the worst thing that ever happened," and this other person says, "You know what? That happened for a reason, and then I'm gonna develop into the person I want to become because of it."
Mm. That's awesome.
David Goggins, I just got through reading the summary, "Can't Hurt Me."
Can't hurt me.
And his line was, "The more crap in your garden, the more fertile your soil." Talking about the more hardship we develop, it actually toughens you up to become a better version of yourself. Versus if you never have any hardship, you're just kind of whatever. You can get derailed or deflated really easy. Kind of like hitting the gym. If you're hitting the gym every day, your muscles are going to be very strong and resilient. Well, your character is going to have the same reaction to hardship. If you can get over hardship, you're going to become stronger and stronger versions of yourself.
I was listening to another great one is Jim Rohn. Is that how you say it?
Oh, yeah.
And he's old school, right? Mm-hmm. He's old school, but man, he brings it. He's like the Yoda of motivational speaking. But he was talking about
it's so good.
That same analogy. Not only, we go to the gym or we invest in our health with exercise, but you need to, or maybe it was Tony Robbins. I was listening to a few of them this morning. I actually try to start my day just something positive before I get into useless basketball podcast, So, but they were basically saying you need to exercise your emotional muscles, your mental muscles, your spiritual muscles. And they said that's probably even more important. That mindset's even more important than other factors like circumstances and your network and even your work ethic. They said if you don't have, if you're not a millionaire, it's because you couldn't handle $1 million. You would mess it up. It would derail your life. So you need to have that mindset first, whatever that looks like for you.
Yeah.
And you need to really focus on exercising that every day.
Absolutely. Yeah, and then one of the things that stood out to me recently too was focusing on our daily activity instead of the results. So a lot of us, we want that money in the bank or we want that house or that car or whatever. And so instead of focusing on that's the result, focus on our daily activity, kind of like what you're doing. So there's a book called The Miracle Morning, and it says, if you can get up early and you can have some quiet time, you can read, you can have a gratitude journal, you can exercise, you can have a miracle morning every morning, and the rest of the day doesn't really matter because you started your day so well.
It's hilarious. It's funny you brought that up. Literally tomorrow, I'm interviewing Hal Elrod for the podcast.
Really? That's awesome.
Yeah.
All right. He's the one that wrote The Miracle Morning.
Yeah, of course. He's big time. I met him back in Sacramento back in the day, and I think he did some sort of event at my house, and he was just a great guy then. He was charismatic, but no one had heard of him really. He was on a couple local.
Yeah.
But man, since then he's just skyrocketed. So I'm shamelessly trying to promote my podcast just by having him on.
Yeah, that's great. Well, he's got such an amazing story, and he's such an amazing person, at least from what I've heard and read about. So that's testimony to you, my friend, of having great friends and influence in your life.
Yeah, absolutely, man. Well, it's a good network. We all try to help each other, but that's what's cool. That's why I really wanted to have you on here, because you do such a good job, but you're never the one to sing your own praises and be all loud on social media and talk about what you do really, but people need to know, because there's also a lot of, let's be honest, there's credit repair gets a little bit of a bad name because there's a lot of shady companies and. I won't mention any name. Yeah, I won't mention any names. One that rhymes with Rexington Raw, And so, tell us a little about some of the bad actors without naming any names and how people should avoid those.
Yeah, one thing that you just want to be cautious about, talk to a couple companies for sure. You want to make sure that you're dealing with a credit expert, making sure that you're understanding exactly what your situation requires. You want to look at the benefit, and then so there's really two bad actors in our industry. So you have a call center, which are the larger companies. You're going to find them online. What people don't realize is is say that they have 10 accounts, 10 collections on their credit, and there's 3 credit bureaus, so there's 30 items that are affecting their credit. The larger companies are only going to go after 3 to 5 accounts a month.
Mm-hmm.
So it's going to take them years to fix your credit. Where a company like ours, we work on referral only. We're working on every account every single month. So our results tend to be 3 to 5 times faster than dealing with an online credit repair company.
There it is right there.
That's the one factor. The second actor in here in credit repair tends to be like the guy woman that's working from home.
Yeah.
And they're charging fees in advance. So if you want to fix your credit, it's like $500, $1,000, or I even heard $3,000. Someone paid $3,000 to this guy and then he disappeared. It's like, in our industry, you can't charge fees in advance. So make sure if your quote unquote credit repair specialist or expert is charging you a lump sum of money, that's illegal to do in every state, and it can't be done. Even by an attorney, can't charge fees in advance in repairing credit. So be cautious of the call center and the person that's working from their home charging fees in advance.
Too big and just good at taking the money, and too small that's unregulated and just sort of rogue actors out there, huh? That's crazy.
Yep, that's it, Norm.
Yeah. Wow. And you guys are, of course, you have it's a husband and wife company. You have employees that have been there a long time. You're local. You have relationships. You're at every event locally in Sacramento and Northern California. But, you could repair credit for anyone all over the country, correct?
Yeah, we can help anyone in any state. Yeah. And we do have warranty, 100% satisfaction guarantee. So if any client is not satisfied with the results at the end of our program, I'll meet with them personally and do whatever it takes to make it right in their eyes. So yeah, I definitely want, the experience to be great and, expectations to be met, and we want to communicate clearly throughout the entire process.
Oh, that's great. And I know, that's another thing, right, with a lot of the big companies or the small, flaky ones, but the big ones especially, they're calling you every day. They're your best friend until, the money goes in, and then they know they have you under contract or that direct deposit, that auto withdrawal, whatever you want to call it. And then you can't even get them on the phone, right? Where you guys you're always accessible.
Yep. Yeah, we're here every day, Monday through Friday. From actually, our first girl gets in here at 6:30 a.m. and then our last girl leaves around 5:30 to 6 p.m. So, yep, you can always reach us. I'm available too if anybody ever wanted to talk to me. I try to, be available and offer consultation advice. Any unique situations, complicated situations, business owners wanting help with business financing or anything like that, I'd love to get involved. It's kind of one of the things that drives me is I love problem solving. So give me a big complicated problem and I love to look at it and try to find a solution.
Oh, that's awesome. Yeah, and why don't you talk a little, because I know so much of what you do is in concert with mortgage lenders, with realtors, to try to empower and help their clients. So why don't you talk a little bit about that process, how and when you get involved, and why the average mortgage person should call you and refer you clients.
Yeah, absolutely. So we're very familiar. I'd say about half of the girls in our office have a mortgage background. They're either loan officer or worked as a processor or underwriting or mortgage call center. And so they understand what it takes to get a loan approved. We're obviously not the first person that the loan officer calls. If they can get the loan approved without using us, that's obviously what they're going to do. But for the complicated ones, or if it's a credit score requirement of 640 or 680, like we mentioned earlier, and the client needs, anywhere from, 40 to 80 points, we love to look at it. And, not everyone can benefit from credit repair services. That's why I feel like we kind of pride ourselves on making sure we only take on clients we feel we can help. But we'll review the credit report, do a free consultation, and then we update the loan officer when we have the appointment with the client. We'll also update them as soon as they hire us. And then usually after about 3 months of work, we're going to reach out to the loan officer and have them pull credit again to see if their clients are pre-approved. And then if they're pre-approved, then we turn the client back over to the loan officer, and then the loan officer refers them to the realtor, and they start house shopping.
So it's all a fluid process, and the loan officer doesn't need to worry about, giving you a name and then not hearing from you again or not having an update
Right.
or it's all you're basically putting them on a silver platter ready to buy, huh?
Yep, that's it. We'll follow up with the clients by email, text message, voice message. We have over 4-week period. We follow up with clients 16 times.
Wow.
So we feel like we're very. It's a email, text message, voicemail combo about every other day.
Damn,
so
that's
we're
too
checking
much.
in,
That's like
we're giving updates.
That's like trying to get your ex back after they broke up with you. That's how That's some good communication.
Well, we don't ever want someone to feel like we weren't persistent enough. So we do our best to get a hold. And it's funny. Everyone's method of communicating is different. Seems like more people are going into text message now. So we just implemented a follow-up system for our clients and also our referrals to where we're following up by text message, since it seems to be a little more easier to communicate that way with people these days.
Yeah, it's funny, right? It's sort of an aside, but how people get oversat. Like, people don't want phone calls these days. Well, some don't, right? But there's so many marketers or telemarketers or and then emails, people get bogged down with it. But now it shifts to text messages where they could, they know it's a little more personal and the person has to have their number. But yeah, it's interesting. How about jumping into briefly break down one thing we haven't even talked about, which is monumental for why you should monitor, fix your credit, pay attention to your credit reports is ID theft and data breaches and financial hacks.
Oh, it's been outrageous. The amount of identity theft has been almost growing exponentially over the last 3 to 5 years. Statistically, I mean, if you want to look at the numbers, the odds of having your identity stolen was about 7% in 2017.
Yeah.
And then I think last year it went up to around 10%, and then this year could be as high as 12 to 15%. So making sure that you're monitoring your checking account, your credit cards, and then your credit reports. We recommend checking your credit if it's not on a monthly basis, at least once a quarter. The consumers can order a free credit report from annualcreditreport.com. It's, in my opinion, it's the best credit report you can get on the internet. The TransUnion annual credit report is the easiest to read. People think if they have a collection or late payment, that report will actually tell you the month and the day that it's falling off your credit report.
Okay.
So it's the only one that has that information on it, so that's good. And then if you have been a victim of identity theft and you see something fraudulent on your credit report, we usually recommend looking at the names and addresses, because odds are there's probably a bad address on there where they're trying to get something sent to. Then you can do a fraud alert, which is free. Fraud alert can last for 90 days or up to 12 months. And then you want to get a police report if you have been a victim of identity theft. And then if you had been a victim of identity theft, you want to get a police report. And then they can contact us. We can give them what's called a fraud affidavit. And with a fraud affidavit, you got to sign it. It's about 6 to 8 pages. And then you want to go get it notarized. And with a police report and having a notarized fraud affidavit, we've been 100% successful in fixing any identity theft, usually within 35 to 90 days.
Wow.
So it's been a pretty quick turnaround.
But yeah, it's massive. And these data breaches keep getting bigger and bigger. I mean, it's, now they're, what was the latest one? Yahoo, and it was like hundreds of millions of people.
Yeah. I mean, everybody's, Facebook, you have Equifax, Yahoo, Target with the credit cards, and then that company no one's probably heard of, they're called Exactus. They leaked 340 million Americans' personal data online last year in 2018.
Insane.
So that's pretty much everyone.
Yeah.
Our information is out there regardless of how secure we are. So just be aware. I'm not here to preach fear by any means, but just be aware. And if you see something suspicious, have them contact our office, and we can do a free consultation, give you pointers on what to do.
Oh, that's awesome. Yeah, that's one we talked about how much a great credit score will save you and about buying a home and all that, but I wanted to make sure we touch on that because that is, the whole ID theft and financial fraud is just as relevant.
Yeah, absolutely. It's just something we need to be aware of. Unfortunately, it's kind of one of those new things that with the times that we live in, you just got to be aware that there are, a lot of breaches, and with information out there, you just got to be aware. It's like a lot of credit card charges, you can slip under your radar. So making sure each month, as painstaking as it may be, is just to take a quick glance and make sure all those charges on the credit card look like it's been a place you've had or something you bought.
Yeah.
And if you do have credit card fraud, it's pretty easy to fix. 99% of the time, it's just a matter of contacting the credit card company and let them know, hey, that's a charge, was fraud. They'll close the card, get you a new one, and then they'll get you that money back on the credit card or take it off your bill.
Yeah, and like you said, it's just a matter of being aware and knowing where to go. But, people spend 20 hours a month on their fantasy football. They could spend, 20 minutes on checking in on their credit statements, right?
Yeah, that's it.
So, Jeff, I have super appreciate your time. This was awesome. So much good info, and I'm going to encourage every realtor, mortgage officer, anyone even with their own credit, of course, to contact you. And I want to...
Well, thanks, Norm.
Yeah, of course. I want to wrap it up with 3 questions. I always ask each guest 3 specific questions. So I got 3 fun ones for you here.
Cool. I'm ready.
So I'll start with the softball one. Here's what does the perfect weekend look like at the Sipes household?
All right. So both my boys, they're 12 and 9. They play competitive soccer. So I would say each of them had a soccer game. They both play forward. So the soccer game where they scored a couple goals each. Then one of our favorite things to do is a run up to Truckee. So I'd say if they had 2 games, 1 game each on Saturday, and then we hopped in the car, ran up to Truckee for the remainder of the weekend, and then did some mountain biking, some hiking, and just came on back. That would probably be one of the best things for us.
It's so beautiful up there, right? NorCal's beautiful,
Yep.
But the Lake Tahoe and Truckee area is just like, it's amazing. Yeah, that is a nice weekend.
We love it.
All right, here's one that's a little harder. What is your credit score?
Oh, great question. Last I checked, my FICO mortgage was 824. So it didn't start that when I first I shared my story earlier.
Yeah.
I was in the 400s. So it's been a long journey for us. So yeah, but and I touched on it earlier. FICO has multiple versions of their score.
Yeah.
So for instance, if you have like auto score. Auto FICO scores can go up to 900. So last time I checked, my auto FICO was 881. Mortgage tends to be a little lower, a little more conservative. So yeah, but it's definitely. I've had my bumps and bruises, but I'm grateful to be in a spot now where I know what impacts the score and being able to keep the credit card balances low.
You're at the top of the mountain there, brother. You're doing something right. All right, and for the last question. What advice would you give the younger Jeff Sipes, whether it was 10 years ago, 15 years ago, or something, when you were just starting out in this business?
Yeah. So make sure you keep 3 to 5 credit cards open. Don't charge more than 10% on the credit card, and try to live on 70% of your take-home pay. And then you want to try to save the rest or give it to charity, 10% and save 20% of your income.
Amazing advice. You can't go wrong with that. Jeff Sipes of Blue Water Credit. Jeff, how could everyone get in touch with you?
Sure. The best way to reach us, if they wanted to call our office, we're here, like I said, Monday through Friday. They can call 916-315-9190. Or we have a ton of information on our website, which is at bluewatercredit.com. They can download a couple ebooks on there for free. And they can also register for a risk-free consultation on our website. So bluewatercredit.com or call the office. It's 916-315-9190.
Awesome. Jeff, you do great work, so I really appreciate you being on the podcast.